But for a closer look at the economy, the Fed, and more, I want to welcome in Kathy Jones, Chief Fixed Income Strategist at Schwab Center for Financial Research. Chris Campbell's also here, served as Assistant Treasury Secretary during the Trump administration. He's now a Chief Strategist with Duff and Phelps Institute. Let's start here in terms of what we think the Fed is going to do, not what they should do, and what you think the market already expects.
Yeah, I think the market's in line with the consensus that they'll cut this week and they'll try to go on pause.
And they'll try to go on pause. So hold on. If they say they're going to go on pause, you think the market's going to be okay with that? Because I'm not in the same camp with you.
No, I'm not saying the market's going to like it. But I think that the consensus amongst economists and strategists is that. I'm not sure that the market is in position for that. So when
you think the market is not positioned for them to say they're going on hold?
Right, because I think the market's expecting them to be ambiguous about their future plans, which I think Powell will try to be.
Right.
But anything that doesn't indicate another cut coming right away will probably be a disappointment to the market.
Chris, where do you stand?
So we think, and our clients largely expect that the Fed will cut rates at least once between now and the end of the year. They don't like to intervene in election years. Election years tend to be.
You say once between now and the end of the year. So, but this week.
Oh yeah, this week, okay. And I think maybe one more. And because again, the Fed just doesn't typically intervene in election years. And so if it, election years tend to be very volatile. This one probably a little more volatile than most. And so I think they want to do what they can now between the end of the year to make sure that we're in a good steady position, that'll get us through the end of the next year.
I just want to point out our survey is not that much different from where the market is priced, which is for a 90% chance of a rate cut tomorrow and an 18% chance of a rate cut in December. Now, what the Fed funds futures say and what happens once the market hears that confirmed,
right, that's what I'm talking about.
There can be a huge gulf.
Yeah. Yes.
It can be like we're priced for a pause, and then Powell says pause, and the market freaks out because you don't know where the marginal money is.
What I mean for the market not being priced correctly is when I look at the Treasury yield curve, the 5-year is expensive if the Fed is not cutting more. So you don't have the slope of the curve pricing in the Fed going on pause.
Okay, philosophical question. Did you guys read this today? Fed rate cuts don't pack punch they once did. This is the Heard on the Street column. Not exactly the newest idea in the world, but the question is, at this point in the ball game and at this point in the cycle, is this actually a wasted effort?
I'll just say very quickly before our guests answer that our survey is full of people who do not believe in the efficacy of these rate cuts. I want to quote one individual here who says, after the next cut, the Fed funds rate would re-enter the zone where there's no evidence that further cuts help the economy. If ultra-low rates and negative rates are such a panacea, why aren't Japan and Germany growing at 6%?
Anybody want to take that on?
Yeah, guys like Paulson that say it's just takes a while over in Europe, and we're starting to see the benefits of what Jim Paulson says. There's a lag effect, and it still does work in his view. And I don't know, the S&P kind of said that.
Well, we're seeing a little bit of benefit in the housing market from the rate cuts, but no one is saying that the cost of capital is too high or that credit is not available.
But they're saying the dollar's too high.
But cutting rates isn't going to help any because the dollar has stayed firm, even though the Fed has been cutting rates because policy is ultra easy elsewhere.
On the headline, I think I look at it conversely. I think that if the Fed does not cut rates, I think the market would react probably negatively. So I think that there's.
If the Fed does not cut, the market will have a complete reaction.
And by the way, can I just say, if they don't cut this time, thinking they're going to cut next time, it's a wasted.
You guys are absolutely right.
You look like you get pressured into cutting later because you didn't cut this time and the market threw it.
And I can tell you the way the Fed looks at that, which is that what the Fed wants to do by cutting rates is to ease financial conditions. Right. When it upsets the market and the market sells off, that tightens financial conditions.
If you're going to cut once out of the next 2 meetings, I would say cut now and warn everybody you're not cutting again later so that it gives the market time to react.
Well, what do you want them to do, Becky?
I don't know. Rates are so low at these levels.
I mean, Steve, we spent years trying to keep asset values high based on low interest rates, of trying to engender the wealth effect, and it worked. Some people would say so. I mean, there's something to it, self-fulfilling.
Let me lay out how push and pull kind of meet here.
I don't think they need to do it, but I don't think they've sufficiently warned the market that they're not going to do it.
Okay. So what happens is the Fed feels like it's given a lot of stimulus. It cut back on interest rate hikes it was going to do. Yeah. it stopped reducing the balance sheet and actually started increasing it a bit now. And third, it's cutting rates. And then on the other hand, you have the phenomenon that Joe talked about, which there's two phenomena. One is the impact of that coming over time. The other, though, is the lagged effect of whatever's going on with the trade war.
Right.
So Powell's got a dance to do, and I don't really envy the position that he's in right now. I think the phrase that you're going to be listening for is meeting by meeting. And I think that's the way he's going to signal. Not going to dash hopes, but he's not going to try to fuel them either.
Right. You were one of the first reporters in the past couple of weeks to come out and say that maybe they'd pause.
Right.
And then there was sort of a flurry of other reports that sort of tried to suggest that. The question is, do those reports, if you will, give the Fed any cover to do that now, or did to the extent that some people are thinking about a potential pause, the market either didn't buy it or didn't want to buy it?
So I think the market did begin, except for what was talked about earlier by Kathy about the 5-year and the curve. The market did buy it. The market has come off dramatically the expectation for a December rate cut. But I just would caution, you were shaking your head when I said this, which is the futures market can price something, but then it comes out of Powell's mouth, and the Fed can go into something believing the market expects it and be very surprised that the market did not expect it.